Hey there, folks. Vegas Trader 66 coming at you with this week's market wrap. I hope you had a fantastic week trading this week. And I got to tell you, if you watched last week's market wrap video, I don't want to pat myself on the back too much here, but we had it pretty much nailed, right? So the thesis was that we were in an area where we could see a potential flat top breakout in the IBB. And then why were we looking at the IBB? Because everything else had ripped for 5 weeks in a row. And if you were looking for some big money to flow somewhere, it made logical sense that we could see it flow into the IBB, which was a beaten down sector, was still in a bear market, right, down 22% or something like that for the year. And we were really approaching this potential flat top breakout. So we wanted to see a break above 270 with conviction. We got that and had some really nice movers within the sector. So hopefully you were able to participate. The other sector that we liked was the XLV, which is healthcare. That was another sector that had a very similar look to the IBB, right? Flat top breakout type setup, and came up into resistance at the 200-day moving average, also potential resistance at this longer term trend line. So heading into next week, I still like these sectors. Let's go back to the IBB real quick. I still like these sectors. I'm not shocked that we're seeing a pullback, right? If you look at the IBB, we're coming up into an area of potential price resistance, right? This acted as support here, acted as support here. And if we go all the way back here, it acted as support here, okay? So it's not a big shocker that we're coming up into this and seeing a little bit of resistance. So maybe what we see, the important thing that we want to see next week is that we pull back into this 270, 269 area, and this then holds as support, right? What was resistance hopefully becomes support. And then maybe what we do is we bounce around in this area like we did back here, and then take this out and potentially go up and test the $300 mark, right? So we may just consolidate in the IBB next week. Now, next week is a big deal, right? Because we've got earnings on deck. So we're going to go through the first one. Let's talk about the first one. The first one is Alcoa. And I want to bring it up real quick because it is kind of interesting. It's in an interesting spot. It broke over this long-term downtrend, right? It is over the 200-day moving average. We have a cross of the 50 and the 100 EMA. It's consolidating. Now, I know that we've had a couple of weekdays here, right, heading into the earnings on Monday. But if they beat Alcoa, which is a very thick stock, by the way, so it's not usually doesn't make really big moves. But if they beat and they have good guidance, then you could see Alcoa actually make a nice little move back up to the $10 mark and maybe take out 10. Okay. The other names that could go with Alcoa, if it is a good report, are U.S. Steel, which actually caught a downgrade today, AK Steel, right? What was the other one? TMST. These were actually on the watch list last week, right? TMST, which actually had an interesting little pop today. Maybe we get some follow through in that if Alcoa can manage to beat earnings. So a couple of stocks there to keep an eye on next week with the Alcoa earnings. And then let's go to the other biggie, right? We've got the financials, which we'll be reporting next week. So this sector not looking quite so hot, right? So we came up into this resistance of this trend line, right? Uh, and it is acting as resistance. We're getting a little bit of a pull. We closed below the 50-day moving average. If the banks, I think we've got what, J.P. Morgan, Bank of America, Citibank, can't remember who else, maybe Wells Fargo, reporting next week. If they report bad earnings or give poor guidance, you're going to see a pull in the XLF. Now, I have a difficult time seeing how the markets can rip higher if the financials can't participate with it, right? Because it has such a big weighting in the market. So that is something to be a little bit concerned about with the financials. Let's talk about another concerning area. Look at this volume here, right? On these retail. We had some significant selling in the last couple of days. And why this is concerning is if you go back to, when we started to sell off in December and through January, retail was leading the way down. That was one of the sectors that was leading the way down. And the big concern is if we back out on the weekly, right, we have this multi-year dominant trend line that we are testing once again, right? So we broke down, and once we broke down below that, we really kind of waterfalled, and I'm concerned that we could see a repeat of that here, right? Gap reported earnings, it was disappointing, and retail has taken a pretty significant hit. So, you think about it, if retail takes a hit, then does that take down a stock like Amazon, which has had a pretty nice little run, okay? And if you look at the other FANG stocks, Tesla had a pullback today. Netflix is consolidating a bit. Looks like it's maybe running out of steam. Facebook had a pullback today. So these are just some warning flags. Look, I'm not suggesting that the markets are going to roll over and dump, okay? Could it happen? Absolutely it could happen. The other thing that we've got going on, I saw this week, is that we have the highest percentage of short interest in the S&P 500 since 2008. Now, that's interesting because it could provide the fuel that actually sends us rip-roaring higher, right? If these earnings come in better than expected next week, if earnings season starts out with a better tone, then a lot of these shorts are going to get caught. And that could be a painful experience. So we could have this has been one of the most hated rips that we've had in a market because a lot of people were unable to participate. So big short interest exposure right now. Everyone anticipating that we're going to roll over. That could provide the fuel that sends us ripping higher. And if we get bad earnings out of the financials, that could provide the fuel, and out of Alcoa, that could provide the fuel to have us pull back. So we just have to keep an open mind as to what may develop next week. The other concerning area, let's go to that one real quick. We'll go to the IYT, which is this is the weekly, same thing. We basically pulled up into this trend line. We pierced it, and now we have been pulling back, right? And this is the other sector that led on the way down. So we've fallen back below the 200-day moving average, right? We've actually we're testing this little short-term trend line here. If we break below, maybe we come back and we then test the long-term trend line. Let's back that out to the weekly. Right, we may come back and test this long-term trend line here, okay? And if we lose that, things get scary again. Let's take a look at the IWM, which, again, is in an area where it could be a logical area to see a pullback, right? We've come up into a potential area of resistance, that trend line overhead. And what I'm concerned about with this one, again, is, if we pull back and we find this 104, 105 area as support and bounce, that would be fantastic. But if we pull back and we lose that 104 area, again, we will be breaking below the long-term dominant multi-year trend line, and that's concerning. The other thing that gives me a little reason to take pause is the T2108, which if you follow me, you know I pay close attention to. We have been up in the nosebleed section, 90, which is extreme highs, right? And then look what happens when you start to get a serious pull in the T2108, right? It can be very dramatic. And look at that. We've got a pretty serious little pull here. So I am cautious about the markets and what could develop next week. Okay, the T2108. When we get up into the 70 area, that's the area where you want to start trimming some profits and building some cash. We got up into the 90s, so that's nosebleed area. And when we've gotten up there before, you can see how many times we have a pretty dramatic drop after we're in that area for a little bit of time. So keep that in mind as well. So then let's take a look at the S&P 500. Let's go to the daily on this one. So S&P, again, coming up into an area of potential resistance, this trend line here, right? Consolidating. We'll see which way this decides it wants to break. Okay, but it does have the appearance of being potentially tired, right? Let me go to the S&P 500. So what I did here was I did a Fibonacci retracement. Basically go from the lowest point up to the highest point, and then you look for your retracement levels, and we've got a retracement level here, 23.6, 38.2, 50, and 61.8. We got a retracement level basically to the 200-day moving average, right? So if we lose the 200-day, which is about 2014, if we lose that, then we could come down, and I would suggest that we may test a round number roll of 2000. If we break below 2000, we come down, maybe test 1975. If that breaks, then likely we come down and test 1940. So S&P 500 is in an area where we could see a potential pull. Okay, so we've talked about some of the weak things, some of the caution flags that are out there. Let's take a look at the SMH real quick. Again, looks very similar, right? We came up into this trend line, we pierced it, we're consolidating and determining which way we plan to head. So, there are a couple of positive things. There was a positive thing back there on the S&P. We do have a 50-100 cross. I do like that. Can we just consolidate here? Could we work off all this overbought condition through time? We could. My problem is the timing of all of this, right? Earnings season is starting. And if we have an earnings recession, if we have another disappointing earnings season, earnings matter. I don't care what anybody says. Earnings do matter. So if we have a disappointing earnings season and disappointing guidance, we could see a fairly significant pull in the indexes. So keep that in mind. Let's take a look at. Let's take a look at the dollar, okay, which actually did close below. Let me see if we closed. We closed right. Yeah, we closed below. Pretty key area of support for the dollar, right? At least price support. We closed below it, and it actually looks as though it may want to go lower. So if the dollar continues to decline, the metals and miners, gold, are going to continue to do well, right? Gold had an amazing pop today. Well, gold didn't. Let me rephrase that. Gold really didn't have a big pop today, okay? Actually, gold was down today. it was kind of flat on the day. But look at what GLDX did, and GDXJ, and GDX, right? The gold miners, the metals and miners continue to be extremely hot. And if dollar keeps dropping, you could continue to see more strength in gold and more strength in the miners. JNUG, right? Look at the move that this thing had. Broke over some key price support, right? Or price resistance, I should say. Broke over that and closed nearly at the high of the day. JNUG, another one. Let's go to JNUG. Where's that at? Or Nugget, I'm sorry. We were just at JNUG. Nugget, right? Closed nearly at the high of the day. So a lot of strength within the gold and miners. Let's take a look at the XME, which is the miners ETF. Where is it? There it is. XME. Look, I mean, that's consolidating. That looks hot. It looks like it wants to go higher over the 200-day moving average. You got the 50-100 cross. You're broken over this, long-term trend line. This looks hot, and it looks as though it probably wants to head higher. So keep an eye on that sector. We talked about retail already. We talked about transportation, energy. So I do want to talk about the move in oil today and energy itself. So, I've been saying for the last several weeks that even when oil was pulling back, the energy sector was actually holding up surprisingly well. So, today we had a pretty significant move in oil. And even though the energy names did move, they didn't move as much as I thought that they would with the move that we had in oil. So I don't know if this is like a little head fake today or what. If you look at the XLE, we're actually, right at this dominant long-term trend. The 200-day moving average is still sloping down. So I don't know if this, I watched Drip all day today because I can't put, I have a hard time understanding how every week we drop more rigs, more rigs go offline, and I can't understand how that could possibly be good for the oil and gas exploration sector. It doesn't compute to me, right? If we're losing more rigs, that means these guys have less work, and I just can't see how that is a good thing. Now, we've got OPEC that's coming up on the 17th, I believe, which is next Sunday. Maybe oil has a nice rip into the event, and then that becomes a sell the news event, regardless of what news comes out of there. Maybe the energy sector has a nice little run into the event. I would not overcommit, okay? I would not overcommit, and I certainly wouldn't be holding through that event. All right, I would rather get through the event, see how everything reacts, and then play it after. That doesn't mean we can't take some short-term day trades, but I just found the action in oil to be fairly interesting today, and the fact that the energy names really didn't have the kind of move that I thought they would have when you had oil testing 40 again. So oil and the energy sector is definitely one that we want to continue to pay attention to next week, right? Volatility, we started to see a little volatility at, I think it was Thursday of this week, right? We had a little bit of a sell-off in the market, and we've got a lot of complacency in the markets, okay? We've got a lot of complacency, but we also have a big short interest. So it can go either way. So we had a little pop right? If we can take out 5, the TIVX, if we can take out 5 with conviction, right? Maybe there's an opportunity to play there. UVXY is another one to keep an eye on. If we can take out 22 with conviction, then maybe we have a more powerful play there. So keep an eye on UVXY, TVIX. Look for volatility to pick up if the markets roll over. That is always a great place to play. And I am still watching SPXS if the S&P 500 does roll over. Okay? So, FANG stocks, we had a little weakness today, right? Retail showing some weakness. Transportation showing some weakness. Financials, we could have a defining moment next week. Not the defining moment, but a defining moment. We've got Alcoa, metals and miners. Keep that in mind. And we've got the IBB, which is having a pretty logical pullback. XLV, also logical pullback into resistance. Let's see what next week brings. Let's see how the earnings come in, and we'll play it accordingly. I did build a fairly significant cash position in both my swing and long-term hold accounts in anticipation that I'm going to need it to play whatever direction we head. Right? I'm going to need, if we break down, then I'm going to need to be able to get aggressive in things like TIVX and UVXY and SPXS. And if we break out, I'm going to need it to potentially play some of the miners, metal plays. You get where I'm coming. Maybe even some of the financials. Those are a little difficult to day trade. So I will be doing stocks to watch this Sunday, 8 a.m. Vegas time. If you've got some stocks that you'd like me to take a look at, tweet me, email me, and I will be sure to get them on the stocks to watch list live on Ticker TV Sunday morning, 8 a.m. Vegas time. Okay, enjoy the rest of your weekend. Keep your mind open. Let's not have any preconceptions of what's going to happen. Let's just play what develops. Okay? Be safe, have fun, and I'll see you either Sunday morning or again next week.